All right, everyone, welcome back to another episode of the Real Estate Hustle. Today, we've got none other than Mr. Nathan Turner. Nathan is an investor, he's an entrepreneur. He's building a wealth of investments through his portfolio and continuing to grow despite all the challenges that come with real estate investing. Nathan, I know that, before we started, we were just quickly chatting about something new that's sort of happening in your world, in
Yeah,
the land of evictions. I mean, what a crazy space. I
yeah.
feel like this is such a hot topic. We could just jump right into that, where you're dealing with someone in a property who have they've been squatting on you for what, a year now? I think you said
Almost 4 years. Well,
almost
more than
four.
4 years, 4.5 years now.
Wow,
It's been
wow,
just
and
ridiculous. Just right as the pandemic started, then Nick
right.
got in.
That's right.
So
That's right.
yeah,
And I mean, what's interesting, what I found curious about the story is, this is one of your properties that's not actually where you live. So you have to actually travel to maintain this one, as well as to deal with these
yeah.
court dates and everything else, right?
And luckily, thanks to COVID, actually, a lot of almost all the hearings have been online. I've only had to appear in court twice, only twice out of out of the numerous times that there have been different hearings. But so far, I've only actually had to be there in person 2 times.
It's
But
funny.
yeah,
Most people don't hear that side of the investment journey, right? Which is why I thought it was such a cool way to take it today, because we always hear, the highlight reel, right? Like, I'm making so much
sure.
in cash flow, I've got all this equity and everything, and nobody ever touches on some of the negative sides of what happens when you do decide to go into this world. So, I mean, tell us how
Right.
you got here. Give us a little bit about your journey to this point, because I know you've amassed
Sure.
quite a bit of wealth and a pretty nice portfolio.
Yeah. So going back, let's see. Before I got into real estate, I had a Curves franchise. So that was that gym for women that was really popular in the early 2000s. As I was doing that, it turned out that I kind of had some time that I could spare, which is about the most precious commodity we could ask for.
Yep.
And so I started to take up real estate investing. I got into fix and flip, and everything was done at a distance from me. I was living in Montreal, and then all the houses that I was fixing and flipping were in Saskatoon, Saskatchewan. So that's right above Wyoming. Yeah, right above Wyoming. And that was kind of my introduction to real estate. I did about half a dozen of those over '05, '06 into '07, and I could feel there was a change coming. I knew there. It was just in the air. I could feel it. And as everything went haywire, I got caught with one property that I wasn't able to sell. So I was, fairly inexperienced with real estate. I was, young and all that. And so I did what I thought you're supposed to do with that, and I rented out the property. So I became a landlord, and I quickly figured out that the cash flow was good. That was nice, but everything else that goes along with it, I couldn't really figure out why people did this on the regular. That didn't really seem to make sense to me. So that was kind of my intro into real estate investing in general. And then it was soon after that, 2009, I got into real estate note investing. So that's where I'm only buying the mortgage attached to the property instead of the property itself. And that I really like. I've been doing that the last 15 years now, where I will buy the mortgage of the property. In those early days, 2009 up until just about 2020, we were buying non-performing mortgages. So where people are not making payments on the house, and we'd have to figure out some way to get them either making payments, or oftentimes they had vacated the property and then we're going to have to take the property back and resell it. So still related to real estate. Sometimes we took back the real estate, but the mortgages are great because once they're paying, it's that cash flow that I liked without any of the headaches. I don't own the house, so it's not my responsibility to fix the roof, to set aside money to fix the toilet, any of those kinds of things. That's not my issue. So that's kind of been the journey. Just last year, we opened up a fund for the note investing so that investors can invest into the fund, and I can go out and buy more of these mortgage notes and do what I love to do. So it's been quite a ride.
I love that. I love that. And that's one of those ones that you don't hear a lot of, right? Purchasing the note. Now, you mentioned Montreal, you mentioned Canada. Where are all your investments now? Are you all over North America? Or are you still kind of north of the border?
Everything's actually in the U.S. I don't do anything in Canada except live here.
Here you go.
That's it. Live here. I get to pay extra taxes, all that fun stuff. But yeah, it's good.
I was going to say, you figured it out early that the investment space in Canada was probably not the best place to always be.
It's tough, and for me, it's been a lesson. Going back to the first fix and flip model that I was doing, the opportunity we looked in Montreal for opportunities there, and they just didn't really exist. Certainly not the same way.
Yeah.
And so it became obvious to me early on. Go where the money is, go where the opportunity is, and so that's what I've done. And for now, everything that I'm doing is in the U.S., and that works just great.
It's funny you say that because a lot of the people in my circle, that's the conversation that's happening right now, right? Do we still buy here in Canada? Do we still invest here in Canada? Do we buy
Mm-hmm.
businesses here in Canada? Like
Mm-hmm.
what's the landscape going to look like? And we've got podcast listeners all around the world, and whenever we mention that, they go, "Man, you guys have a really hard time getting off the ground here in Canada."
It's true. Canada is a tough market.
It's a tough
It is a
market,
tough
and we just
market.
can't
Yeah.
do even that. Like as soon as you went note investing, I'm like, yeah, you're doing everything south of the border, because I don't even think we can do that here at a high level. Best you have is maybe
Certainly,
seconds.
yeah, not the same way. Seconds is really the way that you can do it in Canada, which is a different way of doing it. And I've got some friends and colleagues that love seconds, and that's great. That's not me. I like the first lien mortgages. And so
Yeah.
just for that alone, I'm happy to stay south.
So I guess I'd love to learn a little bit about that. So when you're buying that note, are you purchasing the value of the mortgage entirely? So if there's a 200,000 first on it and you're picking up that note, are you purchasing are you putting in the 200,000 to get the bank out or whoever else out?
I am getting the bank out, but it's always at a discount. So
Oh,
if it's a $200,000 balance, let's say it's $200,000 balance at, let's call it 5%. Then for me, it's a yield play. So I'm always looking for a specific yield target.
right,
Um, so to get my yield, I'm going to buy it at a discount. And so one of the biggest factors for me is what's the interest rate on the note. If it was something that was originated in 2020 at a 3% interest rate, that's going to be a really tough deal for me because my yield target is much higher than that. If
right.
it's a seller finance note that was created at 10%, that's much easier for me to do, and my discount's going to be much smaller. And that's how we roll. But yeah, it's
Mhm.
always at a discount, so there's some built-in equity already,
Right.
and especially my investment versus the property value. I will always make sure that there's some equity spread in there in case of whatever. If they don't pay, then we're still okay.
What percentage of time are you ending up back with the property? Like, I'm assuming if the note's attached to the property, that's your security. If they
Mm-hmm.
decided to completely just walk away, you end
Right.
up with the property.
Yeah.
What percentage of time does that happen?
It's really rare, like maybe 5%, maybe. Um, if they quit making a payment, one of the beauties is if they quit making a payment for some reason, um, I'm not a bank. And so it's really nice to be able to have a conversation with these people and frank, easy conversation and say, okay, so you're not making payments. Therefore, what? What are we going to do? Because ultimately, I'm going to foreclose if you continue to not make payments. I don't want that. I actually really don't. I don't want the house in most cases.
Right.
Owning property is tough.
Yeah.
But if that's the road we got to go, then that's the road we got to go. So what else can we do? And almost every time, 95% of the time, we can work out something else and modify their payment some way or another, adjust the interest rate, stretch out the amortization, whatever the case might be, to get them back into a number that makes sense for them on a monthly basis.
I got you. That's really cool. And if I heard you right, you said you were doing this in 2009. So I mean, it's
Mm-hmm.
it's global recession time. I mean,
Yeah.
what a risky play to come in. Tell me about your mindset in that time. Like, how are you going? This is where I'm going to go. Everybody's running away from
Yeah.
mortgages. And Nathan says, you know what? I'm going into mortgages.
And it was really kind of a recognition of the risk management because the first time I heard about it, I thought, oh man, why would you ever buy a loan where somebody's not making payments? Um, and especially back in those days, there, what it came back to was because I can get a crazy good deal on it. So if
Right.
they owed, just for simple numbers, let's say they owe $100,000, in those days, the house value is probably only 75. In most of the time, almost always, the house is underwater. They were
Yeah.
house value is less than what they owed on it. So in that case, I would bid based on the property value because there's no way I'm going to collect $100,000 on a $75,000 house. So I would bid based on the property value, and back then you could get it for like 30 cents on the dollar. So I was buying these for $20,000, $30,000 each. So there is just a ton of room in there for all kinds of things. So if we need to modify the loan, we can get super creative because we've got that much room in there. If I end up taking back the property, that's fine too, because again, we've got lots and lots of room in there.
You've got 45, 50K
Yeah.
worth of equity sitting in that thing. And I guess, you've picked up the note. So the 100K, you've bought 100K at 25, 30. And so you
Mm-hmm.
could go back to them and say, hey, you know what, can we get it down to 75? Can we get it
Right.
down to 70? And that's your spread. I got you.
Yeah. And that was routine back then. So we'd say, you owe 100, but the house is only worth 75. You know it,
Right.
I know it. So let's just call the new balance of the note 75.
Now,
And,
what are
and
those interactions like? Because like you said, you're not a bank, right? So
yeah,
here it is. I've been dealing with this, this big banker,
yeah,
scary monster coming at me, and then now I get
exactly.
I get Nathan. He's smiling. He's got a great
Regular guy.
personality,
Yeah.
and he's a
Yeah.
regular guy. And he's
And
calling
my
me.
first, for sure, my very first note deal, I bought, it was a package of three different notes for a total of $10,000. And this is
Wow.
in 2010 and all non-performing. But immediately I saw an opportunity because I'm like, okay, it's a $10,000 experiment. I'm pretty sure this is going to work. So let's give it a shot. So the first two, the situation was that the homeowner, in both cases, they had bought this house as an income property. And then whether they had a renter or not, I'm not sure. But at the point where I bought the note, the houses were vacant. So they're sitting there in Columbus, Ohio, vacant property. Two of the owners still lived in Columbus, and I was able to get their home addresses. So I took a friend with me. So I'm, slightly more intimidating, I guess. I don't know, but just as a backup.
Yeah.
And I knock on the door, and the first one, it was this young lady. She was like 25, couldn't have been 30 years old. And I said, well, so here's who I am. Here's the paperwork showing that I'm now your bank. I own your loan. You owe me the money instead of the bank. And I said, however, I'm not here to collect any money. What I propose is, why don't you just deed the property over to me, and I'll wipe out the loan. And she broke down in tears. She's like, "You're kidding? Are you serious? Really? You do that?" And talk about a win-win. So I get the property. If you want to break it down, like basically, I bought a house for $3,300.
Wow.
That was, and granted, the house is only worth 20 or 25, but
Right.
still, on a return on investment basis, like knocked it out of the park.
Yeah, your cash on
So
cash there is insane.
yeah, exactly. So that was my kind of my very first. That really was a light bulb moment for me. It was like, man, I didn't realize how much I was solving somebody's problem. For me, I was like, I just want the property, and
Right.
I hadn't actually clued in at that point of how I was solving problems. So that was really a light bulb, and kind of went from there.
Wow, that's really cool. So I mean, I guess, obviously you mentioned, I think you're building a fund now, so that
Yeah,
people can invest in and get in and out with you, which I think is really cool.
yeah,
Well, for anyone listening, we'll make sure that we get Nate's details on how people can get a hold of you if they want to look at these funds.
yeah.
But yeah, I mean, you've got this resilient mindset. You're going in one of the worst economies. What's that like today? Because I mean, I know it's rates are going up, people are underwater again.
Mm-hmm.
Are you kind of licking the chops a little bit, going, hey, some opportunities showing up?
A little bit. We're looking forward to see what's going to happen, and it's kind of starting to stall out in the U.S. And it'll be very interesting to see what happens. And you've got all kinds of political things going on at the same time, and so who knows what directions that can go just yet.
Yeah, for sure.
However, yes, we're starting to see some cracks.
So how many notes are you guys? How many notes are you guys currently in? And what's that looking like over the next, 2 to 3 years? What are you guys trying to get into from here?
So the fund, we've actually switched gears a little bit. So I did the non-performing for years. And then we've switched gears with the fund where we're just buying performing loans where people are making regular payments. And one of the big reasons for that is because we're collecting other people's money and then having a responsibility to pay that back and to pay out a regular payments back out to the investors. The performing just makes so much more sense and is so much more easy to manage. Part of the experience we got with the non-performers is that it takes time and energy to turn that around one way or another,
Right.
whether that's taking back the property or getting the person making payments again. And the timelines on that are extremely unpredictable, where I can go into a non-performer and think, okay, well, from what we can tell, there's somebody living there. We're going to go ahead and just assume that we're going to be able to work something out because we usually can. And then we get there and lo and behold, it's actually vacant. And so now we're in a situation where, and we can't find the borrower. They've disappeared. They're in the wind. So now we're going to have to go through and do a foreclosure. And so that's a totally different timeline. That's a totally different, expenditure on our part. So
Right.
it can go any direction. And we've seen it over the years just go all kinds of ways. So very unpredictable versus the performing where it is predictable with very good accuracy. We can say if they've made payments this long, they're likely to continue to make payments. And then we've got a pool where once we're fully funded, we're not there yet, but once we're fully funded, we'll have roughly 100 notes in that fund. Where if 10% of them quit paying for some reason, that's not a big deal. We've got plenty of others that we can rely on.
Which
So to
is
answer your very first question, like right now we've got about 2 dozen, and then as we get money into the fund, it's just going straight back out the door, buying some more of these notes.
which is kind of crazy when you hear it, right? I mean, you're Canadian, I'm a Canadian. Can you
Mm-hmm.
imagine walking away from a property like that? That's such a thing. That's such a
Yeah,
concept.
yeah,
That
it
makes no
makes no
sense
sense to me,
whatsoever.
but especially in those early days, we saw that all the time, like all the time. That was very, very common where people just walked away.
Yeah, that's just. I mean, depending on where you're watching or listening to this, everyone in Canada that has a mortgage, that mortgage is assigned to you, the person. It doesn't matter
Mm-hmm.
where in the world you go,
Mm-hmm.
that's going to be attached to your credit report. That's going to be attached to your history. So there's no option to just get up and say, hey, you know what? I'm done. I don't want this property anymore. And I'm going
Yeah.
to go do something else. But in the US, it's that whole non recourse mortgage where you can all of a sudden get into a property, walk away from it, and it's whoever's holding the note, it becomes their problem pretty
Yeah.
quickly,
Yeah.
which is wild when you hear it. So
Yeah.
that's pretty cool. So you guys are looking for growth, you're looking for opportunities in which you can get more and more and more of these notes. You guys have
Mm-hmm.
grown it really well. Are you in any other plays, or is this pretty much where it is now? Because, like you mentioned, you were a business owner, and
Yeah.
I had someone say to me the other day, hey, buying businesses will outperform real estate. And I don't know that I believe that yet. I'm still on the real estate side of
Yeah,
things.
maybe.
But here you are. You went the opposite, right? So you were in a
Yeah.
business. Those gyms were doing well. They were everywhere
Yeah.
at that point in time. I do remember that.
Yeah.
And you decide, hey, you know what? I'm going to get out of that, and I'm going to go into being a landlord and flipping properties and
Yeah. Yeah.
all
All
this
that
stuff.
fun stuff. That was not expected. We were, when we first got into the real estate thing, we thought, oh, we've seen it done on TV. I think we could do that. Like that was kind of the mindset.
Yeah,
It didn't have any intention of making it my full time, but here we are.
I got it. So this is the primary thing now. This is what you do now.
This is the primary thing. There's kind of a offshoot to it. Is I also host an annual conference all about note investing, and that's in Nashville next year's. We just did this year's in June 2024, and then the next one May 2025 back in Nashville, that first weekend in May. So anybody who's interested in the business, anybody who's already in it and just wants to come and network and swap stories and all that kind of thing, that's
Well,
who
hey,
shows
I
up to
mean,
that.
let's open it up, right? Let's get the shameless plug going. Like, what's the website? Where do we sign up? What's the location? Tell us a bit more about your big conference here.
Sure. Yeah. So it's called Diversified Mortgage Expo, the DME, and it's in Nashville, Tennessee, May 2nd and 3rd in 2025. Um, this will be the third year that my wife and I are running it, but it's the 10th annual for this conference. So we were talking just the other day about maybe we need to get a cake or something to show that
Wow.
it's the 10th annual. But
So did you
tons of
guys
fun.
purchase the convention? Like was that something that we did? Was kind of saw something great happening and decided to purchase that business?
Well, I was actually approached by the previous owner. The show is really a good friend, and she and her husband ran it together. The trick is that they live in an RV, and so they travel constantly. They're anywhere in North America, South America, and so she approached me and she'd run it for a couple of years, and through COVID, which was an additional challenge, but she approached me and said, I'm not sure that my lifestyle really makes sense for running an annual conference. And I say, I think you're right. so, so it's in a conference I had been attending right from, its inception. And I love conferences. I'm a huge fan because that network is your net worth. Like that is so, so true. And especially in this note investing world where it's a pretty small community. So it's incredibly important to get out there and get to know people and form those relationships. So
Yeah,
I was a big fan already. And so taking it over was, are you kidding me? Absolutely. I'll do it.
I love that. I love that. Congratulations. That's a smart play, smart
Yeah.
move, and
Thanks.
obviously going to expand your network similar to what we're doing here and everything else. That's
Yeah.
super cool. Would
Yeah.
you? I mean, the thing I'm wondering is most people get into investing. We all seem to land in the fix and flip to start, right? It's
Yeah.
it's one of the ways to get in. You
Yeah.
generate some income that way, and if you're smart, you're able to transition it over to something else. But how do you get into notes? I mean, the big thing is no money in, right? Yeah, everyone wants to use OPM, other people's money, et cetera, et
Yeah.
cetera. So how do you get into notes? How do you get started in something like this? It's mind blowing.
It, it is. And same, when I was first introduced, I was like, wait, you could do what? Really? That's a thing? I had never heard of that before, and most people haven't, and that's fine. But it's a thing, and it happens all the time. I would say for somebody that's getting started, very first thing, get some education because it is not real estate. It's real estate related and it's attached to real estate. But what we're buying is the financing attached to the real estate. So it's actually more of a finance game than it is a real estate game. Ideally, like I say, and part of it is personal preference, but ideally, I don't ever want to own property. It's just so much easier to not. Property, in my mind, becomes more of a liability than anything else, and you get squatters moving in and things like that, and it becomes a liability. So if I can just keep the paper attached to the property, I would far prefer that. But because it's a different game, you're talking about, in certain states have a debt collector's license that you have to have. You're talking about, principal and interest payments, not rent payments. You're talking about, just different kind of filings that you have to do and all kinds of things like that. And so understanding how the game works is very, very important. And I'm happy to refer people to colleagues of mine that teach the business. I don't, but I'd be happy to,
Yeah, I was gonna
kind of
say, you've
pass.
got the convention.
Yeah.
When's the training course, right? When are we gonna get the boot camp and the online training course started?
Yeah, actually, the conference is it's very strict. No pitching. Nobody's allowed to pitch anything. Everything that we do is just pure education. So if there's a speaker up there, at most they'll tell you about a free session that they're offering next week or in a month from now or something like that. But nobody's allowed to pitch anything there. So all
Sort
education. You don't have to bring your wallet.
sort of honing that play that, here we're here to help people.
Yeah,
We're not here to sell them any more money. Good for you. That's
yeah,
that's that's really noble. That
yeah.
is really,
It's a
really
lot of
noble.
fun. It's been great.
Yeah. So I mean, I guess some of the stuff running through my head is I start thinking bigger and I'm going, okay, you've got 60 units,
Yeah.
$4 to $8 million. Are you guys looking for notes that big yet, or where are we at?
We're not. I actually, my again, there's very much a personal preference kind of a thing, but my niche is property values under 250,000, residential, single family houses. Mine tend to be, just because of the numbers, because of the values I'm looking at, mine tend to be on the eastern half of the country. But
Right.
generally, Texas up to Michigan, everything else in between. So I've
Right.
got, notes in, well, South Carolina, Texas, Alabama, Florida, all the way up to, Ohio and Indiana. They're all over the place. But every once in a while, I'll see something that makes sense for me in Nevada. I've had Nevada, Colorado, Arizona, but the vast majority are on that eastern half of the country.
All right. So kind of coming up the Midwest. Now notice you've avoided the West Coast altogether.
Well, and mostly it's just because of the numbers. If
Right.
I'm looking for values under 250, you're not going to find that in California. You're not going to
Not
find
going to
that
happen. Yeah.
generally not in Nevada, but every once in a while something comes up.
And I love that whenever we interview investors, everyone's got a different formula for whatever the
Yeah,
thing is they're doing, and everyone's very rigid on that. It's like, hey,
yeah,
I'm not doing this is what works for me. I'm not getting away from that. So
yeah.
kudos to you. Are you still? I mean, do you have a coach? Do you have someone that's leading you through this, or are you simply, you've done the education, you've learned through it, and now you're holding yourself accountable, or you and your wife are holding yourselves accountable? Like, how are you staying ahead of the curve here?
Yeah, when I first started, I was in three different like mentor classes where three different people had whatever education program they had, and I took all three of them, plus a couple of others that I'd attended, but I didn't get into their like mastermind or whatever. But I wanted just to learn everything I could about the business before I started doing it myself. And I had actually already started a little bit, and then I learned how poorly I was doing it and how much better I could. And so that was really a big part of it. And then just a lot of, trial and error until now we feel like we've perfected our systems and everything, and getting rigid in our box, what we're looking for and what we're not looking for, areas, all that kind of thing. And so I think that's a big part of that is, again, going back to the very beginning and get some education, and then, but don't get stuck there. I've
Yeah.
seen some people that get into the education and they just kind of spin and they don't end up actually doing anything.
Yeah.
But there is a point where you're going to have to trust yourself and
Yeah.
take that leap of faith and just do it.
I remember clients of mine. We ended up, similar to what you were doing. We were doing some almost coaching through fix and flips in the early
Okay.
days, and this client approached us. Then they said, we've been doing all the courses. I
Yeah.
said, well, how long have you been doing the courses? And it had been a couple of years, and
Yeah.
so I said, what's your value in courses? And it was over $88,000 at the time.
Oh, wow.
And I'm going, you've got 88 grand.
Mm-hmm.
I mean, we were looking. I think the property we ended up buying with them was less than. It was actually here in Canada. It was less than 400,000.
Yeah.
And I kind of showed them the math. I said, in what you spend just in education, your down payment could have
Yeah.
been in there, and
Yeah.
here's what you could have done with that. And so they were so heartbroken that this company, and I'll use no names here, but this company had just kind of kept saying, hey, you got to take this course, you got to take
Mm-hmm.
this course, you got to take this course.
Mm-hmm.
This weekend course is going to be 15,000, and this weekend, and they just kept getting them over and over and
Yeah.
over again, and they never got out of the starting block. And so,
Yeah.
we picked them up as a client and put them in their first property, helped them through the fix and flip on site, coached them all the way through it. They ended up making a substantial amount of money on the project. And I remember that comment at the end. They're like, "We're so happy we found you, or we probably would have been another 100K in education before
Oh,
we'd ever done anything."
that hurts. Now, my first flip, and mind you, this was years ago, but my first flip in Saskatoon, 70,000 was
Yeah,
what we picked up that house for. So,
yeah. You just got to start,
you
right?
know,
And I think that gets missed a lot in our investing game, and when we do
uh,
stuff like this is, there's so many resources and there's so much information out there. But at the end of the day, if you don't take that first step, buy that first note, buy that first property,
yeah,
whatever the thing is you're doing,
yeah,
you're gonna educate yourself to death, so to speak. And
Yeah.
there's a running joke inside our little network we have is, a lot of us have PhDs and MBAs in education,
Yeah.
but we did it in the field. And so sure, we still paid for it, but at least we were taking action and we were still doing stuff. So it sounds like you
Yeah.
guys are the same.
Yeah. Yeah. And you got to do it because and the other thing is there's only so much you can learn in a class. And
That's it.
you'll get out there and be like, oh, we didn't cover this. No, you didn't. Because
Yeah.
there's just so many different things that can happen and will happen. So
Oh,
get over
100%.
that.
One of the things, as even as you're saying it, my brain starts going, hey, what's next, right? So I mean, this to me feels a little like an active investing, right? Is there
Mhm.
any plans to get to the passive side of things for you guys, or have you sort of figured out a formula that even though it's active, it's still very passive in nature as well, by the sounds of it?
Yeah. This is everything that we're doing now. We've got kind of our long-term goal is actually 4 years from now. My youngest son is just turning 15 in a couple of weeks here, and in
Congrats.
grade 9.
Birthday.
So once he's graduated, I expect he'll go off and go to school or do something and leave the house. So the goal is, and what we're working towards is being set up enough for ourselves where we've got our own portfolio of notes that covers all of our living expenses and then some, so that we can, quote unquote, be retired
Right.
and just go and whatever, visit the kids wherever they happen to be and do whatever, some volunteer work here and there. We've got some plans, but all of that to say, just that's the goal. So everything now is more active with
Right.
that further goal of being passive enough that I can spend a few hours a week managing and otherwise doing something else.
I love that. It leads me to want to ask, you don't look that old, man. So, I mean,
Yeah.
what are we retiring before we hit 50? Is that what I'm hearing?
Not quite. I'll be 51.
That's
But
not a bad.
and it's
That's
funny
not
because
good.
it goes back to when we were kids, and on Canadian TV at least there was those Freedom 55
Freedom 50.
commercials, and it's kind of stuck in my head. I'm like 55, like that sounds good to me. I like that, and so
Yeah.
that's like kind of been in my head, and so I'm like, no, we can beat that.
Well, it's funny you say that because that's one of the ones that stuck with me, right? And I always
uh,
said, if it's 55, I'm too late, right? I got to get
yeah,
there before that. And
yeah,
you've kind of done, in my opinion, I think what most people look or should at least be looking to do, right? You're in the bottom left corner of the Kiyosaki quadrant, right? So you're in that investor space.
yeah,
You've gone from everything else business owner, and now you're in the investor standpoint, and we know that that's where wealth truly starts to generate. And it sounds like you're
yeah.
building a really great life for your kids and your family as well. So
Hmm.
kudos to you, man. I mean, we don't have a ton of time left, but before we jump, I wanted to know, what are some myths you might want to dispel for people who, they're listening to this, they're watching this, and they're going, okay, I think I want to do this.
Yeah.
What are the most common myths or the common limiting factors that you would sort of say, hey, get over yourself and get going?
Yeah, yeah. Well, one of the myths we kind of started the show with it is just it doesn't always go according to plan. This was the case, just a little bit of a history on that. So we bought it. It was a non-performing note. This was early 2020, I believe, is when we bought it, and it was in the last stages of foreclosure in Illinois. And so I thought that's fine. Typically, I don't look at stuff in Illinois, but it was finishing a foreclosure. Okay, that's fine. That's on the way out. We can deal with that. And then the idea was we were just going to turn around and sell the house. And then, of course, unexpected thing happened. All of a sudden, so we finished it in late February of 2022. The next month, everything's on lockdown. So it was in April, 2020. And then in April of 2020, this lady calls me and says, hey, I see your house is down the street. Looks like it needs some repairs. I can do that. And which is not uncommon. So I was like, yeah, sure. That sounds great. Oh boy. And then somehow she understood that to be an invitation to move in. And I didn't find that out until months later when we already had it for sale. We had a buyer lined up, and then we find out there's somebody actually living there. I thought, say what?
Oh
And then
man.
it's been that much longer. Now it's been another 4 years after that trying to get her out. And so that can happen. So that's myth number one is look, it's not all, roses and rainbows. Things go wrong and there is work involved. So
Yeah.
even though, I'm talking like it's easy and anybody can do it. Yes, but
Yes,
there is work involved and you will come across things that you didn't expect. And so just be prepared for that, if nothing else.
yeah, I love that. And I think that, that's just wise advice for any type of investing that you're going to do, right? I mean, you get a fix and flip and you pull the walls down and, all of a
Mm-hmm.
sudden you got mold or,
Yeah.
I remember doing a fix and flip and by the time we took possession, the owner had taken everything out of the house. So there was no, I mean,
Oh,
there's no furnace, there's no HVAC
nice.
system.
Yeah.
They took as much of the venting as they could, the
Yeah.
cupboards, so
And then good
everything.
luck tracking them down and trying to get that paid
When
for. So
everything we thought we could save that was going to
yeah.
be part of the profit, we now had to
Yeah.
go purchase. And so all of a
Yeah.
sudden the numbers were a little bit wonky. I think we got out of that one okay, but certainly the same. So I
Yeah.
I know exactly where you're coming from. Well, I promised that, we would give you some more airtime. I know that you're looking to build a fund. So
Yeah.
how do they find you? Like if someone's looking to get a hold of you or to invest with you, are you Facebook, Instagram? Is there an email? What's the best way for our listeners and viewers to get a hold of you?
Yeah, I'm getting more active on Facebook. I haven't been that great at it, but I'm there. So yeah, Nathan Turner on Facebook or LinkedIn. Um, Really, one of the best places to go though would be my website, earnestinvesting.com, and that's Ernest with an A, EARNEST. Earnestinvesting.com is the place to go to learn a little bit more about how it works. I've got some videos on there, different presentations I've done, and then you've got the contact me thing on there and set an appointment. Let's chat. I'd love to tell you about what we're doing. And if it's a good fit, great. Let's do this.
That's amazing. Love it. So earnestinvesting.com. That's where you're going to find Nathan Turner. You can also find him on Facebook or LinkedIn. So feel free to reach out, folks, if you are listening. And this is something that means a different avenue for you. Maybe you're just looking to diversify. Maybe you're looking for something different. Maybe you're tired of owning property like Nathan was and you want to get into the finance game. We
Right.
absolutely love it. Nathan, it's been a pleasure kind of learning what you've done, getting to know you a bit, and hearing a bit more. First week of May is when your conference is. So for anybody else wondering, that's in Nashville. Might be a good time for us to get down and connect in person. I want to thank you
Yeah.
so much for coming on the show, my friend. It's been an absolute pleasure getting to know you today.
Fantastic. Thank you so much.
My pleasure.